Hello, 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 hello. Hello, students. So, good afternoon, students, to all of you. Manu, Vardini, good afternoon, students, good afternoon to everyone. Ashwarya, good afternoon. So, students, very quickly, I'll let you know that, I mean, that, so good afternoon, students, to all of you. Now, students, Karthik, two MTPs have been released by the ICI. In fact, the second MTP I just got it in the morning itself, today morning. But since MTP one was already there, I just thought that I picked up some few questions of it because I have seen the MTPs. There are some repetitive questions of the earlier particular attempts. So, any case, those questions we would have done it in the class itself. Earlier attempt, as recent as last two attempt also. Those MTPs, those questions primarily I don't think they are that important because to make the MTP, the IC have already have picked up the question from the recent past. But some of the MTPs, some of the questions are really an important question. Purita, good afternoon. Some of the questions are really an important one, and that is the reason why students, I thought that those questions at least we will have to deal with it. Now, I am doing MTP1 right now. I will be sharing this PDF of MTP1. I think I'll just share with you in your group itself. Indrakshi, good afternoon. In the group itself, I will just share with all of you this MTP1 very quickly so that let's then begin with the discussion. In the MTP1 students, I found the first the case study which is there. 3-4 questions are really a good questions in the MTP1, and therefore those 3-4 questions will help you to really go through some very minutest point they have targeted in the question, which was unexpected from the ICI. But very minute questions have been targeted, and one question was from cooperative society, which again I felt they are a good question. So let me in fact do those questions with all of you, and that is one point that I just thought let's get started with this. I'm just sharing this MTP students for all of you so that you can use them in this context. Just allow me 1 minute, students. I'll just share with you. Fine, students. So I already have shared this in your group. Now we are good to go. This is the first MTP one, which we are going to deal with this one, students. Varun, Manu, all of you, good afternoon, students. Let's quickly run through this first MTP. The first very question itself is a very good question. Very quickly, students, this question is about the time limits. Students, the first question is about the time limits which are being there. Let's look upon to this time limits question, students. So there is a case of Mr. Ram who is carrying on the business of trading in furniture. So Mr. Ram here you will find carrying the business of trading in furniture, and his annual turnover, students, is how much? Around rupees 70 lakhs to 80 lakhs. So less than 2 crores. His brother Mr. Shah is carrying on the business of wholesale trading in food grain, and his annual turnover is around 11 crore, more than 2 crores. Why I'm emphasizing on this more than 2 crores also? Because the due dates would be there, 44 AD implications are there. That is the reason why. Mr. Sham also exports the food grain to Southeast Asian countries directly as well as through his associate. Through his associate students, so accordingly there would be a transfer pricing implication that you will find it further. The following are the particulars relating to Mr. Ram and Sham. Mr. Ram, they have given to you. They have given you all the details. We are not reading this. Mr. Sham also, they have given you all the details. The details, students, are of when he has filed the return of income. When the return of income has been filed for which AY. When the return of income has been filed for which AY, students, that is what they have mentioned in the details part. Okay, now directly I am coming to the questions, and based on that question, we will come back to the relevant part of the questions in this case. Students, if you have the capsule book with you, please keep the capsule book ready. I might use or I might tell you to refer the relevant page numbers in that case, so that will also help you to quickly do a cross check of the provision in the case of the booklet. Okay, the assessment procedure file. So in the assessment procedure file which I have shared with you, here students, what is the time limit available for the assessing officer for completion of assessment of Mr. Ram and Mr. Sham for AY 1819? Now this is worrisome, students. They are talking about the time limit for AY, which AY 1819. So obviously that's the reason why this is some worrisome, because if you see, this is old AY. They are telling you what is the time limit to complete the assessment for AY 1819. Now in the booklet, students, if the capsule book page 427 of the assessment booklet, here you will find the capsule book page number 427. The time limit, students, if you see in this case, I will let you know one thing. In this context, students, let's see first what is for AY 1890. Now, please be careful. Page 427, and there are 2 pages that you have to keep it ready. 2 pages, students. There are 2 time limits which has been put across over here, and therefore we will keep the time limit ready for these 2 things. So one is this, and another one is page 456. Page 456. So what is the time limit available for assessing officer for completing the assessment of Mr. Ram and Mr. Sham for AY 1890? 1890. Let's see what has happened in AY 1890. Point number 1. File the return for AY 1819 on 30th of April 2020 in response to the notice under section 148 served on, when it is served, on 20th of March 2020. So it's 148 means 147 provision. 148 means 147 provision. That is the point. And C for Sham, file the return for AY 1819 on 30th of April 2020 in response to the notice under section 148, when it is served on 9th of April 2020. Now students, if you refer page 456 over here, and there is a time limit of section 153 subsection 2, and in that particular time limit, if you see what they have said in this case is that time limit of 153 subsection 2, no, in a simple word, students, 147 order time limit. 147 order time limit. What is the 147 order time limit? Reassessment order 147 order time limit. They have said that 12 months from the end of the financial year. From the end of what? End of the financial year. In which, be careful, in which notice under section 148, notice under section 148 is served. Be careful, it is served. Served means received. Notice under section 148 is served. The meaning of the term served is received. So this is the time limit to complete the assessment, for section 147. And if I go with this point now, students, yes ma'am, if I go with this time limit, then when the notice has been served for Mr. Ram, which financial year? Which financial year it is served? Financial year it is 1920. It is served on 20th of March 2020, na? So therefore it becomes which financial year? In this case, so it becomes the financial year. The financial year in this case, students, becomes 1920. And if it is 1920, so plus 12 months if you do, plus 12 months if you do, it becomes what? 31st March 2021. 31st March 2021. All of you agree to this one, friends? 31st March 2021. And if you see for this particular part, served on 9th of April 2020. 9th of April 2020 means which financial year? Financial year 2021. 2021. So your financial year would be 2021, in which it is served plus you do 12 months. So it becomes what? 31st of March 2022. 31st of March 2022. Is that point clear to all of you? Every one of you clear with this one, students? That exactly the point. So this is what it would be. So 31st March 2021 for Mr. Ram and 31st March 2022 for Mr. Shah. So in this case, students, the answer happens to be 31st March 2021 and 31st March 2022. I hope that all of you are clear with this one. Now let's see point number 2. What is the time limit available to the assessing officer for completion of assessment by passing order under 143? Karthik, 143 students is your regular assessment. 143 is what? Is your regular assessment. For which AY? AY 1920 for Mr. Ram and for Mr. Sham. AY 1920 students. Now for that, students, you just come to page 427 in this case of your materials in the notes in this case, and in that the time limit is 153 subsection 1. The time limit to complete the assessment, students, is section 153 subsection 1. For completing assessment under which section? Completing assessment under section 143.3, that is regular assessment. Two sections are there, no? Which are the two sections for regular assessment? 143 and 144. And for AY 1920 students, if you see very carefully, AY, there is for AY, please be careful. Here this is the game. AY 1819, there is AY 1920 and 2021, and AY 2021 and thereafter. Sorry, sir. AY 21, 22, 21, 22 and thereafter. So these are the AYs primarily thereafter. For this time limit, students, happens to be in this case 12 months for AY 1819. For this it is, sorry, this is 18 months, this is 12 months, and this is 9 months. Okay, from the end of the relevant AY, from the end of the relevant AY, from the end of the relevant AY. Okay, now if there is a transfer pricing case, students, if there is a transfer pricing case in this situation, if there is a transfer pricing case in this situation, in that case what happens? For transfer pricing case, students, in this scenario, what happens, students? You will add to the existing time limit, add 12 months. For transfer pricing matter, 12 months to the above time limit. To the above time limit. For transfer pricing matter, students, you will add 12 months to the above time limit. That is exactly what the provision says. Is that point clear to all of you? That is what this particular provision says. So therefore, in this regard, students, what we are going to now look into it, which AY that we are talking about it? Here they are talking about AY 1920. Let's see in AY 1920, is there any transfer pricing case that is involved? AY 1920, yes, indeed. Now, in this scenario, students, AY 1920, be careful. In this situation, students, please read this one, students, for this and this. Read this for students. Now, can you give me the answer, students? If you have read it, please give me the answer. All of you should be in a position to give me the answer. Now you know the time limit also. For Sham, there is a transfer pricing. Quickly, students. Now you should be in a position to get the answer. All of you students should be in a position to give the answer. Huh? It's time that you start applying the provision. Don't only copy. You should be in a position to get the answer. Please quickly, students. So what is the answer in this case? I mean, so therefore, students, for Ram, as far as Ram is concerned, you all are aware what will happen for Ram. Normal time limit will be applicable for AY 1920 12 months. So plus 12 months. In this case, for Ram would be 31st of March. In this case, 31st of March 2021. From AY 1920, I'm just doing plus 12 months. For whom? For Mr. Ram. For AY 1920. For AY 1920 plus 12 months. So plus 12 months if I do for Mr. Ram, then this is what it is. For Mr. Sham, what we have to do, students? 12 plus, in this case, there will be 24 months, students. There will be 24 months. All of you agree? 12 plus 12. 12 months already, which is there, plus 12 months because of transfer pricing, so 24 months. So 24 months it will be 31st March 2022. So this is for Ram and this is for Sham. For AY 1920. I hope that all of you are clear with this one, and therefore the answer is B in this case. The answer is B. Now on this point number C, if you see, come to point number 3, students. What is the time limit available to the assessing officer for completion of assessment of Mr. Ram by passing the order under 143 for AY 2020 and 2021. Now this is only for Rama. For two AYs. Which two AYs? For Mr. Ram. Now see over here, students, the two AYs are AY 2021 and AY 2122. These are the two AYs which are marked in blue. These are the two AYs which are marked in blue. Now, as far as Ram is concerned, in this case, is there any special point? AY 2020, AY 2020 and 2021 and AY 2122. Is there any special point? No. Only in this case, he has filed the return, and that is what it is. There is no case of transfer pricing as far as Mr. Ram is concerned. So in that particular case, students, in that particular case, what should be the time limit? 2021 you will do plus 12 months. So for 2021, for Mr. Ram, if you see, plus 12 months will become 31st March 2022. And this you will do plus 9 months. So plus 9 months in this case would be what, students? Plus 9 months if you do 30th of 30th of 31st of December 2022 plus 9 months 31st of December 2022, students. All of you agree to this particular part? In this case, okay, all of you agree to this one? Now the problem is that this MCQ solution, they don't have the solution of this. This is the answer, but if you see the combination in point number 3, if you all see, so this is for AY 2021 and this is for combination for AY 21-22. So far as Ram is concerned. Now unfortunately we don't find any combination of this answer which should be there in this context. So the combination which they have given to us, they don't have any combination of this answer. At the most you can just have the D1, D has got 31st March 2022 and 31st March 2023. So I told you already that from AY 21-22, thereafter students, it is what? 9 months. So in this situation, students, in this particular situation which has been there for all of us, and this is also in this case, so therefore we will ignore this particular part and please see this is the answer. Congratulations, Krishna. Heartiest congratulations. I hope that you are doing well, Krishna. Best of luck for your future. Take care. So now students, I hope that this is what it is. So all of you take a note of it. Now let's look upon to point number 4. Assuming that Mr. Ram and Mr. Shyam have business losses pertaining to AY 22-23, can they carry forward such loss for set off against the business income of AY 22-23? Can they carry forward? Now students, all of you are aware of the point. And what is the point? That if you have to carry forward the loss, then you have to file the return of income within the due date of section 139 subsection 1. Okay, so let's check out what is the due date. What is the due date for AY 22-23 for Ram and Shyam? What is the due date for AY 22-23 for Ram and Shyam? So as far as Ram is concerned, AY 22-23, please understand, he has filed the return of income on 30th of September. Please understand, as far as Ram is concerned, how much is his turnover? Students, what is the turnover of Mr. Ram? Between 70 to 80 lakhs. And because the turnover of Ram is between 70 to 80 lakhs, therefore he is not in the tax audit category. And since he is not in the tax audit category, the due date for him would be 31st of July. So 31st of July is the due date for him in this case. Whereas he has filed the return of income for AY 22-23 on 30th of September 2022. It means it's a belated return, and if you file a late return, in that case you will not be allowed to carry forward your losses. All of you agree to this one? How about for Mr. Shyam? As far as Mr. Shyam is concerned, for AY 22-23, he has filed the return of income on 30th of September 2022. Please be careful. Mr. Shyam has got the turnover of 70 to 80 lakh. Mr. Shyam has got the turnover of rupees 11 crore. And because they have got the turnover of rupees 11 crore, therefore what? Therefore the due date for them would be October, technically. And in that case, has he filed the return of income within the due date? Yes. And therefore, Mr. Shyam can carry forward, but Mr. Ram cannot carry forward this particular point, students. So here if you see, point number C is the answer. Mr. Shyam can carry forward the business loss for set off. However, Mr. Ram cannot do so. That is exactly what this particular point is all about, students, over here. Now with that, students, we go to the case study number 2. Case study number 2 has got mix of lot of things. It's a good question, students. Case study number 2 has got a mix of, so first case study was exclusively for the time limit. The second case study, students, which is there, has got mix of many things. And that is the reason why this is also one of the good case study. Let's see quickly this particular part. The assessment of Shubh Associates, a partnership firm for partnership firm for AY 2021 was made under section 140. Yes, Abhin. No, I mean, for that AY, Abhin is saying that, sir, for Mr. Sham, the due date should be 30th of November. That due date is 30th of November would not be applicable because there is no transfer pricing matter for this AY. The AO has, so here is not there is no transfer pricing transaction that has happened. Otherwise, they would have told you that way. Okay, so therefore they need to tell you that yes, there is some sort of a international transaction that has taken place for which he will have to file the report, transfer pricing report, and on that the due date becomes 30th of November. If those informations are not been given to you in the question, then in that case it becomes a normal due date, and since this turnover is 11 crore, therefore it's a tax audit case, you can stretch it till 31st of October, which is the due date to file the return of income. Okay, so the reference of or the information of the transfer pricing has to be there. Only then you can stretch the due date to 30th of November. Case study number 2. The assessment of Shubh Associates, a partnership firm for AY 2020-21 was made under section 143 on 28th of March 2022. The AO made 2 additions to the income of SSE. Which are the 2 additions that they have made? 1. Addition of rupees 4 lakh under section 40 AIA, and point number 2. Additions of rupees 5.5 lakhs on account of unexplained cash credit. So these are the add back that has happened by the AO while doing the regular assessment of 143. The assessee contested the additions on the unexplained addition. So this has been appealed. So it has gone to CIT appeal. The appeal was decided against assessee. On 12th of April 2022, the assessing officer issued the notice under 142.1 calling upon Shubh Associate to file the return of income for AY 21-22. So can we say this return which is filed is in response to the notice of 142.1? The return for AY 21-22 is filed in response to the notice of 142.1. Therefore, it will mean what, students? It's a belated return. So therefore it's a return filed after the due date of section 139.1. After the due date of section 139.1. All of you agree? Because the notice of 142.1 can be issued only after the expiry of the due date of 139.1. And hence the return also would be said to be a belated return because it is filed after the due date of 139.1. In response to that notice, students, what he has done, be careful. In response to that notice, what he has done in this case, let's have a look. In response to the said notice, Shubh Associates furnished a return of loss and claimed the carry forward of business loss and unabsorbed depreciation. Can he carry forward business loss in a belated return? Answer is no. But can he carry forward the unabsorbed depreciation in a belated return? Answer is yes, he can. Now this is interesting point. Shubh Associates pays interest on loan at 14% to its partner Anil and Ajay from 1st April 2022 being the date of loan. So that's a loan which amounts to rupees 7 lakhs in total in previous year 22-23. 7 lakhs students in total. The same was approved by modification of the partnership deed on 1st of June 2022 with retrospective effect from 1st April 2022. Now students, tell me one thing. if a partnership deed has provided, if the partnership deed has been amended to provide the remuneration and interest to the partners, then that deduction for remuneration and interest, can it be considered from retrospective effect, or shall it be considered from the date when the amendment has been made in the partnership deed? It will be considered from the date when the amendment has been made in the partnership deed, and it cannot be from retrospective effect. And because it cannot be from retrospective effect, students, therefore what, students, in this case? Therefore, in this particular context, we will say what, students? That 1st of June. So please understand there are two disallowance. One is the fact that this 7 lakhs of the interest paid is from 1st of April, whereas it should be from 1st of June. So that April and month of May, 2 months, disallowance will take place. And the second disallowance, students, would be 14% is the rate of interest. It will be bring down to 12%. So finally, how we will calculate this 7 lakhs into, in this case, first of all, 10 months, because 12 months is retrospective, 10 months is prospective. So 10 months only you will be getting it, and that too at the rate of 12% and not at the rate of 14%. At the rate of 12% and not at the rate of 14%. So I have already calculated the amount, students. So it is 5 lakhs. So what is allowed would be 5 lakhs. So disallowed would be 2 lakhs. Anyways, now this is a point, students. I'll discuss it when the question comes. This point I'll discuss it when the question comes. Beautiful particular. This is a very important part. It is there in your booklet also in the chapter of penalty. This is already there. I'll just show it to all of you. Let's see. Point now, MCQ number 5. Would Shubh associates be entitled to carry forward of business loss and unabsorbed depreciation claimed in the return of income? We already have discussed this. It's a belated return. So in that case, it can only carry, in a belated return, it can only carry forward unabsorbed depreciation but cannot carry forward business loss. That is point number 5. Now going to the 6th one, students, going to the 6th point. Can Shubh associates apply for rectification under section 154 or revision under section 264? Rectification under 154 or revision under section 264 with respect to additions of 5.5 lakhs on account of unexplained cash credit, students. Now students, one thing I can tell you, there is a doctrine of merger which you all are aware. As far as 154, be careful, 154 rectification, 263 revision. Okay, there are two sections, 154 rectification and 263 revision by the CIT, and 154 is the revision by the Income Tax Authority. Now in both the case, students, there is a concept of doctrine of partial merger, DOPM, doctrine of what? Partial merger. And as per the doctrine of partial merger, those matters, students, on which an appeal has been filed, the rectification under 154 or revision under section 263 cannot be made. Those matters on which an appeal has been filed, rectification under 154 or the revision under section 263 cannot be made. Apart from that, students, there is another remedy of section 264 which is also by the CIT, another remedy of 264 which actually goes in the favor of the SSC. There are two revision sections, one under 263. That revision made by the CIT goes in the favor of the Income Tax Department, whereas the revision which is made under section 264, that revision of 264 goes in the favor of the SSC. In the case of 264, students, there is a doctrine of which merger? Complete merger. Doctrine of complete merger means what? Means that if on any matter of the order, if the appeal has been filed, then you cannot go for revision on any other matter also. As far as the order is concerned, you cannot go for revision for any other matter also as far as the revision is concerned. I hope that every one of you are clear with this particular point, students. Fine. And that exactly is the game, students. That exactly is the game. And hence, can I do the revision? And they are talking about, students, they are talking about, so Shubh Associates, can you go for on that 5.5 lakhs edition? On that 5.5 lakhs edition, students, that 5.5 lakhs edition has been challenged before the CIT appeal. CIT appeal. So if it is challenged before the CIT appeal, neither you can rectify, nor you can revise. Neither you can rectify nor you can revise under 154 or 264 respectively. Neither you can rectify because there is a doctrine of partial merger. On that matter, you cannot make a rectification which is already in the appeal. And as far as 264 is concerned, if you have gone for appeal for any matter, then not only that matter, but any other matter of the order cannot be revised under section 264. So neither, this is the correct answer, students. Point number D. Now please pay attention, students, this particular thing. Point number 7. Point number 7, students, is a concept which has been pulled from the appeal topic. So those students primarily who are having the capsule, the capsule booklet, they may prefer to run through from that. In this case, I'll just quickly let you know the page number, relevant page number in which this particular point has been targeted. Let me in fact tell you which is that particular page number quickly in your capsule booklet. This is page number 534, page 534 of this thing, just before 534, DS comment. You will find DS comment, and this is before 271 DA. There is a DS comment. Okay, in that capsule booklet, DS comment is there. In page number 534, penalty topic. Okay, penalty topic. Let's see what exactly is the question. Question is, would any penalties leviable for installment received by NBFC? NBFC, non-banking finance company, receiving the installment, whether there will be any penalty on this NBFC. So let's read what is the point which has been given over here. So what they are saying is that further Shubh Associates furnish the following information pertaining to installment paid to NBFC during the previous year 22-23. So Shubh is paying to NBFC. So NBFC is receiving. What they are receiving? Installment for the loan. Is the loan, be careful, is the loan a consideration for business, for NBFC, or for a banking company? Is the loan received is a consideration for their business, for the NBFC and for the banking company, or for the financial institution? Answer is yes. Loan received is a consideration. Now, if that is the case, students, be careful. Remember the penalty of section 2. Remember the default of section 269 ST or the default of section 269 ST. They say that if you receive the consideration amount of more than rupees 2 lakhs, if you receive the consideration amount of 2 lakhs or above, if you receive the consideration amount of rupees 2 lakhs or above, otherwise then through the banking channel, otherwise then through the prescribed banking channel and the account paid check and the account paid draft, then this will be considered as default of 269 ST, for which there will be a penalty of 271 DA, for which there will be a penalty of 271 DA, and the penalty of 271 DA will be equal to the amount of such consideration received. The amount of what? Such consideration received. Now students, all of you will pay attention. Those who don't have the book, please pay attention to that DS comment. In this case, DS comment, I am just reading for all of you. There is a clarification given by the CBDT. They say that in respect of receipt in the nature of repayment of loan, to NBFC, The receipt of one installment of loan repayment in respect of a loan shall constitute a single transaction. So, one installment repayment which is made to the NBFC in this case, that will constitute what? A single transaction. And if that will constitute, students, a single transaction, tell me one thing. The repayment of loan to NBFC on 30th of April is a single transaction. That installment repayment on 30th of April, the installment repayment on 30th of April will be considered as single transaction. Similarly, 31st of May, a single transaction. 30th of June, a single transaction. No amount is getting more than rupees 2 lakhs. But what happens on 30th September? Is that amount getting more than rupees 2 lakhs? Is that amount getting more than 2 lakhs? Yes. So this repayment of loan, which is clarified as a single transaction whenever you make the repayment to whom? To the NBFC. So this repayment of loan will be considered as a single transaction, and hence is there a default? Yes. So NBFC has made the default to receive the installment amount of 2 lakhs or above, otherwise then by way of prescribed banking channel, and hence because of this default, the penalty under section 271 DA will be applicable. And how much would be the penalty, students? Equal to rupees 3 lakhs. So answer is B. Penalty is leviable of for rupees 3 lakhs under section 271 DA. It can be imposed by the Joint Commissioner. 3 lakh, students. Okay. So this is the point, students, which has been there in this context. Now point number 8 in this case is, this is also a beautiful point, students. Beautiful point. Point number 8 in this case. So if you see in the case point number 8 over here, I think this was already there earlier in earlier MCQs also, but let me quickly run through for all of you for your benefit in this context. So students, over here, if I may tell you very quickly in this case, so students, over here in this particular context, if anyone is looking for this one, quickly run through it. Page number 732 of your TCS chapter 194A, and in that point number 2. Point number 2. Okay, which is on 194A TCS chapter point number 2. Now what exactly it is tax required to be deducted at source by firm on payment of interest to Mr. Ajay and Mr. Anila. Please be careful. Now 194A, so therefore the payee has to be a resident. This is for payee has to be a resident. This is interest other than interest on securities. Students, interest other than interest on securities. Okay, 194A is what? Interest other than interest on securities, 194A. So payee has to be a resident, whereas 195, whenever a payee is a non-resident, we go to 195. Fine, that is what we understand. Now see, Ajay and Anil are the two partners to whom the interest has been paid. And Ajay and Anil are the two partners to whom the interest has been paid, students. Now if you see over here in this context, Ajay and Anil, students, you will come to know in this case, be careful. This is the game, students, which you can see. Anil is a, if you see over here, students, who is Anil? Anil is a non-resident. Ajay, so Anil is a non-resident and Ajay is a resident. Anil is a non-resident and Ajay is a resident. So far as Anil is concerned, interest paid to Anil, interest which is paid to Anil, 195. Interest paid to Ajay, 194A. Now, no TDS will be required no TDS. So no TDS is required for Ajay, who is a resident, but TDS will be required for Anil. In this case, under 195, TDS will be required for for Anil, who is a resident. So for Anil being the payee, the TDS would be required. If Ajay is the payee, no TDS is required. If Anil is the payee, then no TDS is required because he is a non-resident. If Ajay is the payee, then no TDS is required because he is a resident. 194A is applicable. So therefore, students, finally, therefore the answer to this particular point number 8 would be point number D. And what is point number D? No tax is required to be deducted in respect of payment to Ajay, but tax is required to be deducted in respect of payment to Anil. Payment to Anil. So that is point number D in this case. Now, what is the amount of interest to be allowed while computing business income of the firm for AY 23-24, assuming that the TDS, if any, has been deducted and deposited on time? Assuming what? The TDS has been deducted and deposited in time. That is what point number 9 is. So in this particular context, students, if it is deducted and deposited in time, it is deducted. So we are assuming that this is deducted and deposited in time. So already we have calculated how much will be allowed as deduction? 5 lakhs. We have calculated already, na? 7 lakhs into 10 by 12 into 12 by 14. So therefore 5 lakhs is the answer. We are assuming that it is deducted and deposited in time. So therefore the answer will be 5 lakhs. So this is what it is, students, in this regard. This equalization levy, this is a simple question, students. So this equalization levy which has been there, it is a simple one. I have not said the other particular part, students, which has been there. I'll just tick mark, students, this particular answers for you. Ticking mark the answer, students. You will refer it at your side. 10B, just to save time. 10B, students. It's a simple question. 10B is the answer. Thereafter, here it is 11A. Transfer pricing EBITDA, this 94B, 30% in excess disallowed. 11A, you can keep taking a note of it, students. This you can do it. 12 point, also it's a very simple one. 12B, it's a simple one, students. 12B. 13 point, students, again a simple calculation. 13D. 13D. 14 also, students, simple one. 14D. 14th also simple one. 14D. And now this is the trickiest part. 15th one. A very tricky part, students, over here. This particular side. Now, benefit of taxation of presumptive income under the Income Tax Act 1961 would not be available to Akash, a non-resident in AY 23-24, in respect of related Indian income if he is engaged in the business of what? Business of operation of aircraft, in this case operation of ships, thereafter civil construction in connection with approved turnkey project, and point number D is plying, hiring, leasing of goods carriage. So they are focusing on would not be available. Now many of you will be saying, sir, this is 44AE. This is 44AE, students. The 44AE is applicable to all person, both resident and non-resident. 44AD and 44ADA, this is one point of that you just keep in mind. 44AD and 44ADA, these are the two sections which are applicable only to resident. Only to resident. So one point which can come into your mind is that, sir, it is point number D. No, 44A is available to all. Now, so far as operation of ships and operation of aircraft is concerned, be careful. In this case, there is whatever, this is mandatory presumptive income for their Indian income. Presumptive income for Indian income, students. Indian income is Mandatory. They don't have the option even of the normal provision. In this case, it is mandatory. Indian income is mandatory. Which therefore leaves the students. Point number C. So I am just giving you the elimination pointer. So therefore, in this case, this is point number C is the answer. So in this case, on related Indian income, meaning therefore, on related Indian income, the presumptive income in respect of civil construction, this will not be available as far as point number C is concerned. So very quickly, students, without analyzing much, because this will be an MCQ part, so I'm not decoding further. Time being premium, there is things which I need to decode it, but I just have told you broader part that flying, hiring, leasing of goods 44A, all persons. So even a non-resident can opt for 44A and do a presumptive income on that. A and B, ships and aircraft, it is a mandatory for them to choose the presumptive income only. So this leaves us with which option? Point number C. So this is the point, students, which is with there. Now this question which we have seen practically, students, this is a normal question. The total income question which is there, it's a normal question. I might think that this they would have picked up in some of their earlier attempt. This is my guess and my assessment. But what I strongly feel is this too is a beautiful question, students. Ultimate question that they have targeted on a cooperative society. So question number 1 which is there is a normal question. You can directly refer the solution from this one and you can save time. No need for me to step in. There is no unique adjustment also as far as question number 1 is concerned. But question number 2A, students, I will do with all of you. It's a really a good question. XYZ cooperative society is engaged in marketing of agricultural produce by its member. The profit and gains attributable to such business for AY 23-24 is rupees 65 lakhs computed. Attributable to such business. Now, if you are aware, there is an ATP deduction, 100% deduction. They will get it for from the profit of what? Profit which is engaged, profit which is in respect of marketing of agricultural produce, 65 lakhs. Therefore, we will say it is a profit and gains. All of you will agree to this particular point. ATP deduction is available. It has employed, now this is the beauty of this question, it has employed 10 new employees with salary of rupees 22,000 per month on 1st of May 2022. So from May to March 2023, whatever is the salary which you are paying, for that there is an extra deduction of 80JJAA. Salary is paid by account paycheck, which is the precondition. It gets its books of accounts audited under 44AB. Audit is a precondition. Audit is what? Is a precondition for the purpose of deduction under 80JJAA. It also earns interest of 30 lakhs on FD with banks. FD with banks, on that if you earn interest, ATP deduction is not available. But if you have made a deposit with another cooperative society from which if you are earning interest or dividend, then 100% ATP deduction is available. Compute its total income and tax liability for AY 23-24 and advise whether it should opt for special provision under 115 BAD or not. Beautiful question, students. Now, students, since you have to advise whether he should go for 115 BAD or not. In 115 BAD, students, if you all are aware, cooperative society has got a rate of 22%. The base rate is 22% plus flat surcharge, which we all are aware. The flat surcharge would be applicable plus HEC. This is the alternate tax regime. Okay. Under the normal provision, students, be careful. Normal provision, you have to be very careful. Students, in the normal provision, what will be the case? Herein, under the normal provision, you will compute there would be ATP deduction and 80JJAA deduction. This is one. And then you will have the total income, and on the total income, you will calculate the tax liability. We'll see the solution also, students, together, but I'm just putting a framework. Now, the tax liability, students, that you will go to calculate, would be up to rupees 10,000, it is 10%. 10,000 to 20,000, it is 20%, and 20,000 above, it is 30%. That is the rate of tax for the cooperative society. Surcharge will go when the total income goes beyond 1 crore. That is this thing. For cooperative society, I am talking. Now, you tell me one thing, students. If he is taking the alternate tax regime of 115 BAD, be careful. Whether ATP deduction is it available? So here ATP is available, ATJJAA is available. In the normal provision, I am talking about it. If he is taking alternate tax regime, whether ATP will be available? No. What about ATJJAA? Whether ATJJAA will that be available? In this case, answer is yes. Remember, ATJJAA, ATM. These are the two deductions which are available even if you have taken up the alternate tax regime. ATJJAA and ATM are the two sections which are available to you if you have opted for the alternate tax regime under 115 BAD. That is what it is. So this is how the structure will be. And now, students, finally, in this case, the beauty of this question lies whether the tax as per the normal provision, whether it will be compared with the AMT or not. Alternate minimum tax, AMT. Whether the tax under the normal provision, whether that will be compared with AMT or not. AMT is applicable for, there are two things, MAT and AMT. As far as the MAT is concerned, it is for a company. AMT is for non-company. Now, all the non-company who are there, if they have taken the deduction, chapter 6A deduction, which deduction, students? Now, which are the deduction? When AMT would be applicable, very quickly, 35 AD deduction. At that time, thereafter 10 AA deduction. And be careful now, in chapter 6A deduction, it is from 80H to 80 RRB. From 80H to 80 RRB, if you have taken the deduction, then in that case, AMT will become applicable. Now you tell me one thing, students, in this case, whether ATP falls under this bracket. ATP, yes, ATP falls in this bracket. In this case, OPQR. So P is there. What about ATJJAA? Is ATJJAA also falls under this bracket? HIJ. So even ATJJAA is applicable. So therefore, what will happen now? Now you have to calculate the AMT, in which whatever the total income that you have computed here, you will first take over here on this, and that total income would be added with what? Added with these two deductions. That will be added with this two deductions, students. So therefore, the total income that you have computed above will be added. This will give you the adjusted total income. On that you will apply the AMT rate. So that is exactly what is the structure. And whatever is the AMT that you will get, students, that AMT will be compared with what? With the tax liability as per the normal provision, and higher of the two will be the tax liability that will be there under the regular provision. Higher of the two will be the tax liability will be there under the regular provision. What about if he is opting for 115 BAD? What about if he is opting for 115 BAD? If he is opting for 115 BAD, in that particular case, whether AMT is applicable? No, AMT is not applicable. Neither AMT nor MAT, nothing is applicable. So whatever is the tax liability that you have determined over here through comparison from the tax as per the normal and the AMT, then whatever is higher, that you will select, and that you will compare with the tax under 115 BAD. And whichever is the best, that means that whichever is lower from these two, whichever is then lower will be the final decision that you will make for what? Whether I should opt for 115 BAD or not. This is the beauty of this question, students. Let's run through the solution. Now that quickly we can now run through the solution. I have already introduced the concept. So this question I really liked it, students, and quite probability very high that this can be targeted in the question. Maybe not in the same form, but something about cooperative society and 115 BAD that can be targeted and all. So students, please pay attention. One more thing which I will tell you on this backdrop. Students, please pay attention. On one more backdrop, I will tell you. Remember, students, we have done the double taxation relief question. Double taxation relief question also we have done. Now, in the double taxation relief question that we all have done, in those questions also, students, you have to calculate the tax liability. Like question of Mr. Kalpesh, question of Miss Amruta. There are questions which you people all have done it, and then there is a foreign tax credit available, and then you have to compute the tax liability. And in that, remember of Kalpesh question, actually you see very strictly 80 QQB they take the deduction. 80 QQB they take deduction. And if they take deduction under 80 QQB, even 80 QQB also fall under this category. Even 80 QQB, does it fall under this category? Yes, it does fall under this category. OPQR. So Q comes before. Q comes before, students. So in those double taxation relief question, when you have to calculate the tax liability, in that tax liability calculation, students, what we will say? In that tax liability question, students, whether whatever it is a tax as per the normal provision, should you compute the AMT also? Answer is yes. But students, if you compute AMT, then from AMT also there has to be a foreign tax credit. So that is a very complicated step. ICI avoid itself in calculating that, and no solution of the ICI you will find that kind of solution. But there is a concept which is there. How from AMT how to calculate the foreign tax credit. From AMT or even from MAT, how to calculate the foreign tax credit. There is a solution for that also. But ICI does not follow that approach in their main solution. But can we do one thing for examination, students? Students, can we do one thing for examination? We will also solve the way it is given to us in the solution. The way you have also solved it, Mr. Kalpesh, Ms. Amruta, check like whether they are getting 80 QQB deduction or not. 80 QQB deduction specifically. Because 80C deduction, there are question of Ms. Amruta where 80C deduction was taken, 80D deduction was taken, but 80C, 80D deduction if you have taken, then whether AMT is applicable if you take the deduction of 80C and 80D? No, because this section of AMT will be applicable if under chapter 6A, you have claimed chapter 6A deduction from 80H to 80 RRB, which means the target has to be 80 QQB. So if 80 QQB, which is the Kalpesh question in double taxation relief chapter, in that question, definitely the solution is not given what would be the AMT impact in that. No, it is normal tax liability. In that the foreign tax relief has been given by comparing the foreign rate with the Indian rate. Lower of the two is applied on the doubly taxed foreign income, and that is how the credit has been calculated. But please write a note in this case. If the question comes in the examination, what is the note that you are going to give? That in the above case, since Mr. Kalpesh has claimed 80 QQB deduction, even the AMT would be applicable, from which the foreign tax credit calculation shall be done. Even AMT will be applicable, from which the foreign tax credit calculation will be done. At least write in the note, don't give the solution. Is that clear to all of you, students? Every one of you? That exactly is the point. So please do write a note, and that will give you that level of edge, but only 80 QQB. I am repeating it again, students, only 80 QQB. Okay, so let's run through the solution, students, over here. Question number 2A. So if you see over here, students, 65 lakhs, and thereafter IFOS is 30 lakhs, the interest on FD. This gives you 95 lakhs. Now 95 lakhs, this 80 JJAA, 11 months deduction, 30%, 22,010 employees for 11 months is 7,26,000 in ATP, full 100% of 65 lakhs. And that gives you what? 72 lakhs, 26,000, students. then the total income, students, is how much? 22,74,000. 22,74,000 is your total income, students, in this regard. Is that point clear to all of you? Everyone? And that exactly the point. Now, if you see the tax liability over here, students, over here in the tax liability question in this context, what is the tax liability question, students? The tax liability, students, up to the slab rate I told you, up to this is this. Then from 10,000 to 20 is to 2,000. From 20,000 to 22 lakh, 30%. So this much is there. Students, one important point, MTP2, students, MTP2 I will do tomorrow morning with all of you. MTP2, and I will do at 6:15 in the morning, 6:15 to 8:15, because then I have got lectures, so I cannot take after that. So that's a time which I will use for MTP2. So therefore, all the MTP question, important question also would be done. Okay, so that is precisely the point. Now, health and education says, students, 4%, which has been added in this case. The total income is, students, how much is total income? Total income is 22,74,000. 22,74,000. So because it is 22,74,000, therefore what should? Therefore, no surcharge. It should go more than 1 crore. So tax liability. Now, please, students, don't forget this. I have already told you in the class. Always tax liability should be rounded up to the nearest 10. This has got half marks. Huh? Tax liability to be rounded up to nearest 10. Now see AMT. AMT would be, okay, hold on. Corporate society. I've just forgotten. ATP, if you see, except ATP deduction, students. This is the beauty of it. For cooperative society, if you see, students, I again forgot, because we were doing the range. ATP, you see in your page in your capsule book itself. Cooperative society, they don't add ATP. Yes, Ramkumar. They don't add ATP. Did you remember that, students? I was so engrossed in that range that I forgot this concept. In ATP, students, they don't add the ATP reduction. Please, in the capsule book also, if you want to see the relevant page, you will just, yeah, that's an exception for the cooperative society. Keep this point in mind, students. Keep this particular point in mind. As far as ATP is concerned, they don't add in the AMT calculation. They don't add what? They don't add this particular amount of ATP in computing the adjusted total income. In computing the adjusted total income, they will never ever add ATP reduction, except for ATP. All the remaining particular point will be added except for ATP, students. So in this case, you will find it in page number 199. This particular point, which has been there over here. So if you see over here, students, page number 199, in this context, page 199 of your capsule booklet, 199. Okay, in this case, except ATP, except ATP, all the other items has to be added back. This is one of the very important point. So ATJJAA will be added but not ATP. ATJJAA will be added but not ATP. Is that clear, students? So with that, this has been done. Thereafter, let's see the 115 BAD calculation. 115 BAD calculation. So students, and the rate of AMT, students, cooperative society, one more point, I think this is already been emphasized in the class also, that generally the rate is 18.5%. Generally the rate is 18.5% for AMT, but for cooperative society, you know, the rate is 15%. MAT rate is 15%. So be careful. AMT has got two rates. This has already been dealt. Emphasis has been given. For cooperative society, primarily, the rate is 15%, and for other, in this case, it is 18.5. And how about for the MAT? MAT, students, it is, as you know, it is 15%. The rate of taxes. So this is one thing which you just be very careful about it. And on that, AMT rate of 15% on that, add HEC, and then thereafter, this is what it will be. Now see 115 BAD calculation, students. 115 BAD, see here zigzag. Here ATP is not allowed, but ATJJA is allowed. Can you see this? That's the beauty of the question. ATP is not allowed. That we have already seen. ATP is not allowed, but ATJJA is allowed. ATJJA and ATM. But for AMT, ATP is not allowed. ATP is not added back. Sorry, for AMT, ATP is not added back, but ATJJA is added back for AMT, and that is a really a great particular thing which has been there. So now, students, if you see it over here very carefully, in this context, 95 lakhs is your income, total income. On that total income, ATJJA 7,26,000, and ATP deduction, students, ATP deduction will not be available, and therefore total income for 115 BAD is this much. 22% is the rate of tax of 115 BAD. I already told that. And flat surcharge. See, here only there is a flat surcharge for 115 BAD, whereas for AMT and for the tax as per the normal provision, surcharge was not applicable because the total income didn't exceed 1 crore, and thereafter the HEC. And then your tax liability would be 22 lakhs 8,420. 115 BAD, it is how much? 22 lakhs 8,240. Whereas if you see here, how much is your tax liability? If you see over here, students, then this has to be compared with this. And whichever is higher, what is higher? Higher is this one. 7,06,370. So 7,06,370 will be compared with 115 BAD, which is 22,08,240. 22 lakhs 08,240. So should you opt for 115 BAD? Should you opt for 115 BAD? No. Why? Because 7,06,370 is definitely much lower as compared to the other one. I hope that all of you are clear with this one. So this is what it is, students. And after this, students, this is the only question which has been there. After that, students, rest all the question I have seen, it's repetitive. Students, rest all the questions are repetitive. This was targeted in the last November attempt. It was also there in our module. So it is not going to be targeted again. This was targeted in the last attempt itself, charitable trust. Targeted in the last attempt itself. So again, they picked up directly. Not going to be targeted. Authority of advanced ruling. Theory is there. So this theory B1. Do this theory. Do this theory. Now this is the case of equalization levy. Old question. Old question. I don't think they are going to target it. It's a simple question. Old question, simple question. So this is again old question. So you can skip this particular part. So therefore, in this case, question 3B1. So what I am marking the questions are 3B1 because you will not have time now to refer everything. 3B1 I am marking. In this case, question 4A, students, you will do it. Directly do the solution. Question 4A, do the solution. Question 4A, do the solution. 4A I am marking directly from the PDF. 4B, skip it. Skip this one, old question. Old question already, transfer pricing, old question already targeted. They will not do this repetitive question again. They will not do the repetitive question again. Okay. And thereafter, this is again the repetitive question, but you can still read this one. 5A and 5B, read this one once. Read once. That's it. Because this may again come in the examination. Theory question on assessment, we have already done this. It's a repetitive question. Still read it once. Chances of it being there in the examinations are quite high. Okay. This is again, question is covered in your book. Old question. Don't do this. It is already there. I think asked 2 or 3 attempts back. So leave it in this context. Leave it in this context. Thereafter, students, this particular question, 6A, simple question, read once. Read once. So 6, I will only say, students, 6, A, B and C, theory question, all this one, read once. Simple question. My intervention is not required. So I have marked for all of you, which are the questions, students. Question number 6, you will do it full, but only read once. Question number 6, read it once. Question number 5, A and B. Question number 5, A and B, again read it once. 5, A and B, read it once. That is it. And in this case, students, question number 4A, read once. Question number 4A, read it once. And last one is 3B, read once. That is it. Students, all of you through with this one. So we are done with this one. Tomorrow morning, 6:15, students, I'm going to have with all of you for MTP2. Just like this, I'm going to have a quick session with all of you primarily, and that should be all. I've already have distributed this PDF of MTP in the WhatsApp group to all of you. So that should be all of it. Okay. Students, tomorrow morning for MTP2, again I'll pick up this important questions which I feel are new, unique, could be targeted. Please, I'm telling you, November 23 examination questions would be only from the limited range of the question that we have got. I have already have done with you three RTP questions, three videos of RTP are there. The RTP videos are very important, students. You will find in our channel the old videos. Please do that. These are really very good questions of the three RTPs. MTPs I'm selecting few questions, and for MTP2 also I might select few questions. Tomorrow I'll see you at 6:15 morning and we'll see through it. Okay, take care, students. Bye bye. Please, let's see